Hello friends, good morning to all of you, and this is the video related to the RBWM JAIIB, and let's have a look at the difference between the profit and the profitability. So if we just look at the definition of the profit means the surplus amount, the excess amount, right? So that is basically what that is a profit. This is the definition part I'm just telling you, right? So you have to deduct all the expenses from the total revenue. So total revenue minus total expenses, that is you are left with the profit. And profitability is what? It's the ability so as to generate the profit. It's the ability of a company that it can be generating the profit, and further it generates a profit relative to the resources, relative to the investment, initial investment, or related to the cost that we have been incurred. So all these points are to be looked into, and it's the ability related to it. So that's the profitability. So what is about the focus? So when we are talking about the profit, it focuses on the actual monetary amount. We are focusing on the actual money that we are going to earn, right? That's the focus related to profit. But when we're talking about the profitability, we are talking about the efficiency and the effectiveness. That how efficiently we are working, how effectively we are running the business operations so as to generate the profits. And if we look at the calculation, how it is calculated, we have to subtract the total expenses from the total revenues. That is the calculation related to it. And if we look at the calculation of the profitability, like it is measured as a financial ratio, like you'll be calculating the gross profit ratio, or let's say net profit margin, on return on investment, return on equity, right? So you are to calculate these financial ratios so as to check the profitability. But for the profit, simply total revenues minus total expenses, that will be the profit. And what about the time frame? It is for the profit, it is calculated for a specific time period. Like you are going to calculate the profit for 1 month, for 1 quarter, 1 year, etc. But about the profitability, you are to going to evaluate over the multiple time periods, over the multiple years, so as to analyze the trend, right? And what about the absolute value? It's an absolute figure. Like it will be telling you the profit that you are having the profit of rupees 1,03,000. Like it may be an absolute figure. So it is not considering the company size or capital invested. It is not considering anything. But when we are talking about the profitability, it is of the relative size. Like if we're talking about the profitability in a way na, because it's based upon the financial ratios, so you're considering the company profile, company size, efficiency, effectiveness, and you can be comparing between the firms and the different industries using the profitability. But that's kind of thing which won't be possible there, because in case of the profit, you're not considering these particular points, like not considering the company size, you're not considering the capital invested. But in case of the financial ratios which are there so as to evaluate the profitability, you are using these different points. So that will be helping you so as to evaluate among the different players, right? So last but not the least, it's about the importance. Definitely, the profit indicates whether the business is earning surplus or not, because there is no point that if you're not earning anything and you're still doing the business, right? So if the business is earning the surplus income, so it's basically very much useful so as to assess the short-term financial performance. But when we are talking about the long-term preferences, long-term sustainability, we should be going for profitability, that how efficiently or effectively we are going to use our resources, our assets, our investments, our capital employed, and everything for the competitiveness and for the growth potential purposes. Clear with it? So these are the differences between the profit and the profitability. Now, let's have a look at the another topic, which is again very much important. It's about the traditional measures of the profitability. Traditionally, how we used to measure the profitability. There are 2 points related to it. One, it's related to return on the assets, and the other one, it's about the return on the equity. There are 2 points related to it. So we'll be covering them one by one. First one, it's about the return on the assets. Now, ROA is a profitability ratio. It is what? It is a profitability ratio. As I told you, for profitability, for evaluation of the profitability, we do use it. And further, what is the formula related to it? What is the formula related to it? It's about the net profit after tax, because it's about the what profit you're earning over the assets. So in denominator, we will be having the total assets, and in numerator, we will be having the net profit after tax. So in numerator, it will be net profit after tax, that is PAT, and in denominator, we'll be having the total assets, right? So that's about the return on the assets. It's about the return on the assets. And what it tells us that how effectively the management is utilizing the company's asset so that we are able to produce the earnings. So that we are able to produce the earnings. And further, what are the components? One, it's related to NII. The one thing it is related to NII, that is a net interest income. Now, net interest income is going to represent the difference between the interest which is earned on the assets and the interest which is paid on the liabilities during some specific period. So let's say you're earning the interest of 9% on your loans, but you are paying a interest of 6% on your deposit. So what is your NII? It is 3%. It will be 3%, right? So it is very much important indicator for the bank's core earning capability. For banks, core earning capability. So it is interest rate received on the assets minus interest rate paid on the liabilities. Or simply we can be saying interest earned on securities plus loans and interest paid on deposits and the borrowings. So this can also be there. That is NII, net interest income. After that, it's related to the interest rate spread. Interest rate spread. Now, what is interest rate spread? Like the same thing almost, but it's just about that what we are receiving and what we are paying. So that we can get to know that what spread that we are going to earn. So it's basically difference between the average interest rate earned, between the average interest rate earned and average interest rate that we are going to pay on the liabilities. Because the difference will be telling us what? They will be telling us about the interest rate spread. And there is one more important term, that's the NIM. That's the NIM, that is net interest margin. See, the net interest margin is basically there as to assess the profitability and efficiency in generating the interest income. This is also profitability ratio. And this is about the difference between the interest income generated by the banks and interest paid on the borrowings relative to the earning assets. So simply what interest you are generating, net interest income, right, divided by the earning assets, we can say. Divided by the earning assets. You can also be writing the total assets, but more specifically, it's about the earning assets. So NII and average earning assets are the two components of the NIM. So when we're talking about the earning assets, we're talking about those assets, those are generating the income, such as loans, advances, investments. That's basically the NIM. So higher the NIM, what that indicates? Higher the NIM means efficient asset utilization. If NIM is higher, means the utilization is better. But if NIM is lower, means narrow interest spread is there or higher funding cost is there. Then higher funding cost is there. Clear? Further, it's about the return on assets for the bank. For the bank purposes, if we are to calculate the return on asset, what was the basic formula related to the return on assets that I've told you about the return on the asset? What was the basic formula that what return you are getting over the asset, that is your return on the assets? What was the formula related to that? Is net income to the total assets, or we simply told you profit after tax divided by the total assets. That is a return on the asset. That is a return on the asset. But when we're talking from the bank point of view, it is net income divided by the average total assets. Very important formula. So net income means we are talking about the fee income, net interest income minus the operating costs. Minus the operating cost. And when we are talking about the average total assets, means the total assets at the start of the fiscal year, at the end of the fiscal year divided by 2. So as to calculate the average of the total assets. Clear? Clear with it? Now let's have a look at the numerical part here. So company ABC reported fee income to be 10 lakh, interest income 20 lakh, interest paid 15 lakh, operating expenses 5 lakh, total assets at the start of the fiscal year 3 crore, and total assets at the end of the fiscal year 2 crore. Calculate the company's return on the assets. We are to calculate the return on the asset. How will we be calculating? It is net income. What is the formula? Net income divided by the total assets, average assets. That was the formula. And how we are going to calculate it? Like our fee based income is 10 lakh, right? Interest income earned is 20 lakh. So total income earned is 30 lakh rupees. This is the total income. This is the total income that we have earned. And what about the payments? The interest paid is 15 lakh. Interest paid is equal to 15 lakh. And further, the operating expenses, those are 5 lakh rupees. Those are 5 lakh rupees. So total expenses we can say that will be equal to 20 lakh. That is equal to 20 lakh. So what will be the profit, or we can say what will be the net profit? That will be equal to total income 30 minus 20. That is equal to 10 lakh. That is your net profit. Now we are also to calculate the average assets. Average assets. And that would be equal to what? Opening assets are given to be 3 crore. Like at the start, it is given to be 3 crore. At the end, it is given to be 2 crore. So average will be equal to 3 plus 2 crore divided by 2. So it will be equal to 2.5 crore. 2.5 crore. So what will be your return on assets, ROA? That is your net profit divided by the average total assets. The two formulas I told you, na? The one formula, it was related to the income wala part. The above one, that's related to the net income to the average total assets. And other than that, it's also related to what? Net profit, net income or net profit, the same thing, right? So ROA would be equal to net income, but that is 10 lakh divided by 2 crore 50 lakh. So multiply by 100%. So ROA would be equal to 0.4%. It is 0.4%. Clear with it? Now, after that, the next topic, it's about the return on the equity. Now, return on equity is basically what? That on shareholders value, what income you are able to generate, what return you are able to generate. Not about the total assets, but now we are talking about the shareholders equity that is invested in the bank. So the numerator will be all same. So it will be profit after tax or net profit, right? And divided by the average shareholders equity fund. Shareholder equity fund multiplied by 100. This is a formula related to return on the equity. Or simply we can say net income divided by bank capital. But when we are talking about the bank capital, we should not be considering the reserves and all parts. Reserve surplus, those are not to be considered. Because we are talking about the income only, right? So reserve surplus, that's not to be considered in general. But if it's a combo is given to you for the numerical purposes, simply go with it. Right? So return on equity basically measures the profitability of the bank in contrast to the shareholders equity fund. So it basically tells that on the owner's fund, what we are earning. It's not about the total assets, what you are earning. It's about the on owner's fund, what profit we are able to generate. Clear with it? So let's have a look at the question. Company ABC reported fee income to be 10 lakh, interest earned 20 lakh, interest paid 15 lakh, operating expenses 5 lakh. So what will be the net income or net profit? So total income, that is 10 plus 20 minus 15 plus 5. So that is equal to 30 minus 20, that is equal to 10 lakh. So first of all, we calculated the net income or net profit, we can say. That is your total expenses, total incomes minus the total expenses. So that we just simply calculated. That came out to be 10 lakh rupees. And the other one, it's about the bank capital is given. So we have to calculate the return on equity. So it is net income or net profit divided by the bank capital. Simple as that. So it is 10 lakh divided by 50 lakh multiplied by 100%. That's what we need to calculate. So it's like 20%. The return on equity is 20% here in this case. The next topic, it's about the branch operating efficiency. Now we want to know about the branch efficiency, that how efficiently the branch is able to cover the cost, able to generate the profits and further deliver the services to the customers that we want to know, right? For a particular branch, we want to know that. Because when you're having the multiple branches, you want to know the profitability branch wise. So as to check the efficiency at a single unit level, right? And what are the strategies for improving the efficiency? How it can be improved? There are the different strategies that we can be improving the profitability. We can be increasing the efficiency. Let's have a look at those points. The first one, it's about the business realignment. Business realignment. So banks are to analyze their own processes, their organizational structure, that is to be looked into, what products we are offering, right? Because after analyzing only, we'll be able to know that either we are using our resources effectively or not. So realignment is basically like we are to restructure the department, we are to focus more on the profitable segments, right? And let's say if there is some non-performing activity, we are to eliminate it. That's about the business realignment, right? So it's about analyzing and taking action. I'm going to write over here. It's about simply analyzing. So if you analyze that you are wasting your time like doing something, so after that, if you eliminate it, definitely you will be more effective. So it's analyzing and taking action. The first point. The second one, it's about the channel optimization. Now we are basically providing the services through the various delivery channels like branches, ATMs, net banking, mobile banking, UPI, etc. Okay. So efficient channel management is going to reduce the overall operating cost. So definitely the accessibility will be improved, the service quality will be improved. That will be making us much more effective. And further, the process cost, we are to identify the inefficient processes. And further, let's say if there is deduplication of the work, we should be redesigning the workflows then. We should be going for the automation and the digitization. That will be helping us. Further, the fourth one, it's about the staff productivity. It's about the staff productivity. Now, employee productivity lies, we can be giving them the training sessions. We can be giving them the training session, and also let's say we can be we can be having the performance measurement systems with us, and further the teamwork must be there, right? In a way, the staff, the quality work will be improved and operational performance will be improved. Further, technology automation, I've already told you we should be using more and more AI, machine learning, RPA, very important. RPA. What is RPA? It is a robotic process automation. When one thing is to be performed again and again, right? You can be using RPA. We can be using the advanced banking technologies, right? That will be streamlining the operations, and the accuracy and efficiency will be improved, and the overall operational cost will also reduce. Further, the next one, it's about the vendor management. So we can be having the SLAs with the vendors. That is a service level agreements, right? So if you're having the third party vendors, right, you should be complying with the SLAs. We should be complying with the service level agreements that we say to be SLA. So we should be having the agreements with the third party vendors, and we should be checking the compliance with the SLAs. The quality service delivery must be checked. The cost efficiency must be checked. And if it is to be checked, the feedback must be given, and you should also always be asking for improvement. Further, after that, the seventh one, it's about the product bundling and the relationship pricing. So bundled product means when you're offering the not only single product but also the bundle of two or three products at some lower cost, let's say. Or also you can be providing some deviation to the customers based upon their long-term relationship with the bank, right? So that basically is going to increase the loyalty, right? That's going to deepen the relationship with the customer, and ultimately the profitability will be improved. Like if you just went for one single product, but the bank offered you the multiple products in a way that it's a bundle, it's just like uh, you're paying for a combo price, combo thing, right? So combos are always available at the lower cost, and the benefit is to the customer also. That represents a value to the customer. The eighth one, it's about the sophisticated customer segmentation. No, the segmentation means categorization must be based on the customer needs. It can be based upon the income level, transaction turnover, or also be based upon the profitability. Like it depends upon it. And the bank can be redesigning the products, or bank can be offering the tailored solution to the customers based upon the this segmentation. So that is going to basically an innovation in a way. Further, it's about the real-time cross-selling, upselling. Like you can be using the AI and everything so as to do the upselling or cross-selling, like selling the multiple products. Like you can be selling the insurance, you can be selling the mutual fund units or something that basically uh, offers the bank the fee-based income. Further, the 10th one, it's about the innovative reward design can also be there. Like you can be having the loyalty program and the reward systems, right? So premium benefits to those customers who are profitable and at the same time which are loyal to you, right? So you can be having the reward point system with you. So whatsoever you have transacted so far, what products we have offered to you so far, and if you have enrolled into that products, you will be earning rewards, and based upon those rewards, the something will be offered to the customer that will be doing what? That will be encouraging the customer. That will be encouraging the customer so as to doing the continued engagement with the bank, right? Further, it's about the automatic customer center, because there can be the grievances, but if you're having a very good customer care center, which is let's say AI powered, which can be working 24/7, so ultimately what will be done, like your overall productivity will be increased, and the customers would be happy, right? And they will be able to get the response 24/7. Further, it's about the big data. Big data is just like you are going to provide complete analysis, and you have to completely analyze everything about the customer. So it will be giving the 360 degree view related to the customer, how they behave, what are their trends, and you can also be using it for the managing the risks, and further if there is any disparity between the transactions or something. So big data can be used in a very good manner. It can be used for the risk management purposes. It can be used for the fraud detection purposes. It can be used so as to give you the insight related to the customer, the 360-degree view of the customer. So very huge usage and the benefits for the big data, right? So this is how we can be improving the efficiency. Clear with it? Play with it. And that will be all about this video. Thank you so much, and see you again in the next video. If you want to get the complete course of JAIIB, the course is available in English only language also, and also the bilingual course is available. Simply just do WhatsApp JAIIB to the number 83609 44207, and I'll be sharing all the details with you. So thank you so much, and see you again.